Welcome back to the Watch List. I'm Diane King Hall. Let's get right into the retail radar. We've seen a lot of retailers report results this week. We want to break down where things stand, what stood out so far. Joining us now for that, we've got Jharonne Martis, Director of Consumer Research, LSEG. All right, so let's talk about top takeaways. And also, sorry, I mangled your last name after all these years.
All good. All good.
Okay, so let's talk about just your top takeaways. We've had Macy's out, we've had TJX, Best Buy today, et cetera. What's your takeaway in the sector?
I think without a doubt, retailers had a really jolly holiday season, but it was all promotional driven. So what we have right now going into 2024 is a consumer that's been conditioned to only open up their wallets if they find a discount. And now that we had January retail sales, those numbers weren't that great because the promotional discounts have come down. We can see about the same in February. However, March will be a different story. And this is because Easter is coming earlier than usual this year. And then and then Easter is when everybody tends to refresh their whole wardrobe. So March will be very telling whether consumers are willing and able to splurge and pay full price for the latest fashion items, or if they're still looking for that promotion in order to open up their wallets and purchase the latest fashion items.
It did catch me off guard that Easter was so early this year because I didn't even give up anything. Confessions for Lent this year, which I should have. All right, that's a sidebar. Okay, so who are the winners? Like to your point about the discounting, I'm one of those consumers I need a discount to buy. But who's the winner? Who can kind of stand up in the current environment with how consumers are shopping?
Without a doubt, Walmart was the biggest winner so far. And then we had this week TJX showing that the off-price retailers, that's where the consumer is gravitating because they still want the latest fashion items, but for less. Now going into next week, some of the names to watch are The Gap. The Gap is receiving a boost from its Old Navy division. They're making a comeback, but it also again underlines that value proposition, how important it is. Yeah. So according to our LSEG StarMine data, it's telling us that Gap is likely to not only beat earnings estimates, but post a positive surprise next week. Yeah. Other names to watch out are Abercrombie & Fitch. They're on track to post their third consecutive quarter of double-digit comps. American Eagle is receiving a boost from Aerie. And then it will be very interesting to see what happened at Target. Because, again, Target tends to do well during the holiday season. They had really good promotions. But a lot of that market share has gone to Walmart.
Yeah, it has, because we started seeing that trade down when inflation was becoming more sticky. You started seeing the six-figure income shopper trade down to Walmart. And then that became a habit and a pattern where they continue to shop there and not so much at Target.
Right. So now those customers have become loyal customers at Walmart. Walmart in return is, riding that wave, and they've actually been adding a lot of more merchandise on their e-commerce platform. If you remember last week when they reported, those e-commerce numbers were off the roof, because again, they're riding the wave and they're making sure that those loyal customers stay there by offering them more products online.
And then let me ask you, when you think of winners, because for instance, you talk about Abercrombie & Fitch, which has certainly been a recovery story because they had a difficult period. Fran Horowitz really brought that company back. I mean, it was, it used to be popular, then she changed things, made it not dark anymore when you go in there, just a lot of changes.
No perfume.
Yeah, exactly. Are the winners the kind of both the discount and the specialty stores that have really focused on their market, and then the losers, for lack of a better word, those who are in the middle and just...
Right. So Abercrombie & Fitch definitely has a loyal customer following. And to your point, it's a favorite place to go for denim, which can go up to $100 per pair. So this is telling you that if parents don't mind paying $100 pair of jeans for their kid, it underlines also the health of the U.S. consumer right now, So yes, they do want to open up their wallets if they find a value, but they're also willing and able to pay for a $100 pair of jeans for their kid, which is still growing, So they won't last very long, as a parent, you know what I mean?
Yeah.
But anyways, having said that, Abercrombie & Fitch, they have a loyal customer following. And then when we talk about the losers, we're looking more at the department stores, at the apparel sector, because those haven't had a must-have fashion trend for some time. That might change going into Easter. That being said, analyst poll by LSEG are bullish on this new trend that is coming up which are white pants.
Oh wow, white pants are making it. Are they?
A
Well, they
comeback.
started making a
Yes,
comeback.
and so there's expected to be hot for the spring
Yes.
merchandise. Walk around, you'll see that a lot of the retailers are already putting them on the front of their window.
That's so interesting. We went from, well, there was initially not bell bottoms because that's going back decades,
Right.
but like we had the boot cut, then to
Right.
the skinny, and now we're back to
the white pant.
bottoms.
Yeah,
Okay.
yeah.
All right. But then I want to ask you
Yes.
about inflation and if you have any
Yes.
visibility on how inflation, like, yes, it's come down.
But it's still
But
high.
how is it affecting the pocketbook of consumers and where they're shopping?
Yeah, definitely. It's still having a big effect on consumers. In fact, to date, we've received 22 negative guidance already for the first quarter, and only 3 are positive.
Okay.
So retailers are warning us not to expect too much from the consumer this year because the prices are still very, very high. They already witnessed during the holiday season that the consumer is more enticed to open up their wallet if they find a discount. So I think that's why March is so critical, because it will tell us where the consumer stands on the whole idea of promotion versus paying full price for the latest fashions.
So, does what happens in March kind of set the tone for the rest of this year?
Absolutely. What happens in March will be very telling of the state of the consumer. Consumer confidence has been high for some time, but it's come down because they did get spooked up because of the latest layoffs in the tech industry. The unemployment rate is the one economic indicator that consumers understand very, very well. And if they feel that that number will go up, then they'll put their hands in their pockets and hold back on spending. So that's the key indicator, which will determine whether the consumer spends for the rest of the year or not. Still, having said that, services, hotels, restaurants, and leisure is still outperforming restaurants. So when we look at the biggest winners for 2024, consumers still prefer to go eat out with the family, go travel, as opposed to going shopping.
Yeah. Oh, that's so interesting. Because we saw some of that pattern last year,
Yes.
with consumers turning their dollars more towards experiences versus the things.
Right.
You know.
And that trend is still expected to be strong for the remainder of 2024.
I have been very surprised by the strength of the consumer over the past couple of
Yeah.
years, honestly. Not that, I know there was originally all this talk about, oh, recession's coming. It never
Right.
materialized last year. Okay. And you,
So
I wanna
if we
go-
do have
go ahead.
if we do have a recession, it won't be consumer induced, because we've seen it last year was the strength of the consumer, and we still expect it to be very strong in 2024.
Never bet against the American consumer.
Unless the unemployment rate starts to go up. So
Okay.
the consumer has been engaged because they've been gainfully employed.
Okay. And I want to go back to really quickly to the point you made about department stores and the challenges they're facing. I think about Macy's numbers, for
Right.
instance, this week, and especially with Macy's saying, okay, they're going to focus more on their luxury side with Bloomingdale's.
Right.
Is that wise?
It is, because the bigger store format has not worked for the department stores. In fact, you walk into a lot of them and you still see the exact same designers that you've seen over the last 2 decades. So the smaller store format allows them to concentrate more on those brands that really resonate with the consumer. And yeah, it is a way to turn around the department stores and give them the facelift that they so much desperately need.
All right. And anything else from your data final thought on your data that you want to leave us with?
So what we're seeing is that Q1 will see a slowdown, but then we could see a pickup in the second half of the year. The strength of the consumer will rely heavily on the unemployment rate, but we are also dealing with a value-driven consumer, and we're seeing that consumers are being more strategic, therefore, with the promotions that they're offering and the timeliness of how they're offering it.
All right.
Yes.
All right. We're looking for more of those flash sales, I suppose.
Exactly.
If things don't work out in March.
Right.
All right, Jharonne Martis, thank you so
you.
much for joining us. That was Jharonne Martis, Director of Consumer Research, LSEG.